Warren Buffett has been sending out some very strange signs about the US economy through the things he does. He's making it very clear what he thinks by the way he acts. When you look at the last three financial crises, Warren Buffett did a great job of keeping a lot of cash on hand right before the big crashes. That's why I think it's very important for all cryptocurrency users to pay close attention to what Warren Buffett is doing right now. As we can see, the cryptocurrency market is very connected to tech stocks. This is a very clear message from Warren Buffett about tech stocks based on what is happening in the home market right now. You may now be wondering what the home market has to do with tech stocks and cryptocurrency. As it turns out, the answer is pretty obvious once you know a bit about economics. As you can see, housing statistics often shows where the economy is likely to go in the future. A roof over your head is the most important thing that everyone always thinks about. So the way they choose to spend their money on a roof over their heads gives us a pretty good idea of where the market is right now. Also, Warren Buffett has said and thought a lot of really insightful things in the past regarding the housing market, which I believe are still very true today. I want to show you this because it will give us a great idea of how we should start acting based on how the market is working right now. Pay close attention. And what we see in our real estate business, we're in so many states that we can't count them, is a slowdown everywhere. We can see it most clearly now in some of the markets that have been the hottest. And I think the markets that are most likely to see the biggest drop and the biggest bubble are the ones that are high-end and where people have bought for investment or gambling. Okay, just one more time, I want to make it clear that tech stocks and cryptocurrency are both part of that asset class. This is an older clip of him talking about real estate. We'll get a comparison to more current data soon, but this is very important for tech stocks and cryptocurrency. Instead, buy a house with $100,000 and borrow $270,000 to pay for it. They won't move out if the worth drops to $250 because they have a job and everything. When families stay together and there are jobs, you don't lose a lot of money even if the market value is less than the loan value on any given day. When people hold condos as investments or for gambling, or when day traders from the internet move into condo day trading, the market can move in a big way. It stops for a while and then starts up again. A house is not the same as stocks. If you own 100 shares of General Motors, that's how much they'll sell for on Monday. Don't fool yourself about it. People who own real estate, on the other hand, often think about the house that sold across the street a few months ago and decide that they only need one buyer, who still doesn't know that things have slowed down. You'll make your sale. In Florida, Dade and Broward counties have the most expensive condos at about $500,000 each. In December 2004, there were less than 9,000 condos for sale in those counties, and believe that 2,900 of them were sold in a month. You were turning over one every 3 months less often than that. There are now over 30,000 ads but only about 2,000 sales a month. Well, 30,000 homes is $15 billion worth of property, and it's likely that there will be real discontinuities in a market like that, where people suddenly understand that the supply and demand situation has changed. I believe there was some kind of boom, but it will be hard to say how big it was until it's all over. Especially in the more expensive homes, I would be surprised if there aren't some big drops from the peak. So let's quickly look at what he said and see how it fits with what's going on now. In 2006, Berkshire's cash was growing at an out-of-this-world rate and was about to reach a new high. A year after Buffett's words, the housing market starts to fall apart in places like Miami and Phoenix, especially in the condo markets, which were way too expensive. Let's watch the clip again. Warren basically says that the number of months of supply for homes in Dade County has gone from 3 months to something much worse. He also says that the market will usually stop going down before a real estate crash. This is because people will understand how much inventory there is and cause prices to stop going down. And of course, this is what really happened in 2007. When you look at the apartment market in Dade County in particular, prices dropped by 50% in many areas, and they dropped even more if you looked for short sales. Case-Shiller reports this drop, but many people were able to get deals much better than this. Prices fell as much as 80% in some cases. The story of Miami was a mini case study for the rest of the country, as prices fell everywhere and set off a chain reaction that finally caused the world's financial system to crash. Naturally, Buffett jumped in with his huge amount of cash and bought great companies for pennies on the dollar. He ran out of cash in the years after 2007 and had to stop buying things. As we've talked about, he's been adding to that pile to record levels since then while making similar subtle comments about the market today. There are now 16 months of supply in Miami's apartment market, which is a huge change from the pandemic lows, when there were almost no months of supply. As Buffett says, we know what's going to happen next because real estate prices are flat and sales volume is very low across most of the country. When you put this together with the cash building up, you have a crazy accident and almost perfect conditions for another Berkshire sweep. The home market is going through big changes right now, so Buffett's cash hoarding can't be said to be just a market adjustment. I agree. I wanted to show you guys some more info as well. There's a good reason why market Warren Buffett has so much cash on hand. I will also say that Warren Buffett doesn't always pick the right tops and bottoms, but he always buys after the crash, sells during the good times, and buys during the crashes. He makes a crazy amount of money doing this. Okay, so it's clear that we can learn something from Warren Buffett. In addition, I want to show you some other data that shows the economy is getting weaker. This means that fewer people will be able to pay the crazy prices that are happening right now in the stock market, the grocery store, and the real estate market. Okay, this is going on all over America right now. The rest of the world too, of course. The Philadelphia Fed Manufacturing Index went down by 5.6 points in March to 12.5 points. This was the second month in a row that it went down. New order expectations for the next 6 months dropped by 30.8 points to 2.3, which is the lowest level in 3 years. The only two drops that were bigger in history were during the Great Depression in 1929 and December 1973. But if things keep going this way, we'll be right on track with the financial crisis of 2008 and of course December 1973, which was a terrible month for the markets. Many of you were not alive at the time, but it is still true. It also fell 40 points, making the 6-month business picture the worst it has been since January 2024. At the same time, prices paid went up 7.8 points to 48.3, which is the highest level since July 2022. To put it another way, this is completely crazy. It's clear that demand is falling, which means that manufacturers aren't making as much. However, prices are still going up. That makes no sense, but why is that? What's going on with prices that keep going up and up? That's why. The boom in the stock market, the credit bubble is the cause, and this is what's making it happen. Okay, this is a real-life example of how bubbles form and how they pop. As you can see, DoorDash now lets customers pay for their food delivery orders. I can sell you a swamp if you don't think this is a mess. This comes at a time when U.S. credit card debt hit a record high of $1.2 trillion, and funds of $2 trillion have been spent. The amount of money you have saved is going down, and the amount of debt you have is going up. Not your house, car, or furniture. You can borrow the money to pay for that $20 delivery order in case you can't pay it today, yes? There seems to be a bit of a credit card debt bubble going on right now, but as you can see, this is only the largest part. People used buy now, pay later options to spend a record $75.1 billion in 2024. The Philadelphia Fed says that a huge 19.9% of people in the U.S. will use these services in 2023. Consumers are beating inflation by taking out loans. The New York Fed says that in the fourth quarter of 2024, total U.S. family debt rose by $93 billion to a record $18.04 trillion. Debt in households has grown by $3.9 trillion in the last 5 years. Credit card debt, which reached an all-time high of $1.21 trillion, saw the most growth. People are falling behind on their payments because interest rates are still high. In Q3 2024, 10.8% of open credit card accounts were only making the minimum payment. Now I want you to look at this total amount of debt, how it has changed over time, and what has caused these huge drops over time. This shows that it was going up in 0